You are leaving money on the table every single month. And the worst part, your bank knows, the government knows, but nobody picked up the phone to tell you. Today that changes. My name is Cruz, and in the next 15 minutes, I'm going to show you one number, one specific number, and when you hear it, you are going to want to check your bank account before this video is even over. Stay with me, because the number I am about to share is not the one you have been told your whole life. And for Canadian seniors on CPP, OAS, or GIS, it is the number that actually matters. Meet Gordon, 72 years old, retired electrician from Kelowna, British Columbia. Worked 36 years, never missed a tax filing, never missed a payment. Good, careful man. When Gordon retired, he did exactly what any smart person would do. He took his savings, $52,000, and put it in a high-interest savings account at his bank. Safe, accessible, earning a little interest every month. He felt good about it. Fast forward 2 years. Gordon gets a letter from the CRA. His GIS, his guaranteed income supplement, had been reduced. Not eliminated, just quietly reduced by $970 a year. Gordon called his bank. They said everything looked fine. He called Service Canada. They said the calculation was correct. Nobody did anything wrong. Nobody made a mistake. The system worked exactly as it was designed to work. And Gordon lost $970 every single year because of money he already owned. You want to know how that is even possible? Keep watching, because what happened to Gordon is happening to hundreds of thousands of Canadian seniors right now, quietly, legally, and completely unnecessarily. Here's the thing nobody explains when you sign up for GIS. GIS is not just a payment, it is a calculation. Every single year, the government looks at your income from the previous year and decides how much GIS you get. And here's where your bank account comes in. Your bank balance is not income. The government does not count your savings against you, but your bank balance does one thing every single month without asking your permission. It generates interest. And that interest, every single dollar of it, is income, fully taxable, fully counted by the CRA, dollar for dollar against your GIS. Here's the exact math. For every $1 of interest income you earn, your GIS goes down by 50 cents. Read that again slowly. Every dollar in, 50 cents of GIS out. Gordon's $52,000 was sitting in a high-interest savings account earning around 4%. That generated roughly $2,000 in interest income every year. $2,000 times 50 cents, $1,000 of GIS gone every single year, while his money just sat there doing nothing but quietly working against him. And here's the part that really gets me. Gordon never spent that interest. He just let it sit there. He was being careful. He was being responsible, and it cost him $1,000 a year in benefits he had already earned. Now I want to stop right here because I know what some of you are thinking. Cruz, my savings are not that big. Does this even apply to me? Here's the honest answer. If you have any savings sitting in a regular bank account, checking, savings, GIC, anything outside of a TFSA, and you receive GIS or you are close to qualifying for GIS, yes, this applies to you. Even $10,000 at 4% generates $400 in interest. That is $200 of GIS reduced every year. Over 5 years, that is $1,000 gone. Not from bad decisions, not from bad luck, just from keeping your money in the wrong place. And here's the connection that almost nobody talks about. GIS is not just a monthly payment. GIS is a key. When you receive GIS in most provinces, your prescription drug costs go down automatically. In Ontario, GIS recipients pay zero deductible under the Ontario Drug Benefit Program. Zero. In BC, your pharmacare coverage improves. In Alberta, your seniors benefit expands. So when your bank account interest quietly reduces your GIS, it is not just reducing one payment. It is potentially affecting your drug coverage, your provincial benefits, your overall financial picture. One account, multiple consequences, and nobody sends you a letter explaining any of it. Okay, Cruz, so what is the fix? One word, TFSA. I know, you have probably heard of it, but here's what most people never explain clearly. A TFSA is not just a savings tool. For a retired Canadian senior on a fixed income, a TFSA is a shield. Here is why. Money inside a TFSA earns interest just like a regular savings account. Same bank, same rate, same access. You can take the money out anytime you want. But the interest inside a TFSA is completely invisible to the CRA. It does not appear on your tax return. It does not count toward your GIS calculation. It does not trigger OAS clawback. It simply does not exist as far as the government is concerned. Same money, same interest, same safety, just in the right place. If Gordon had moved his $52,000 into a TFSA, that $2,000 interest would have been invisible. His GIS would have stayed exactly where it was. He would have kept his full $970 every year. And his provincial drug coverage would have stayed intact. He did not need to spend differently. He did not need to invest differently. He just needed to move his money across the room. And here's the number I promised you at the beginning. Not $100,000. That is the CDIC insurance limit. That is about your bank failing. Canadian banks almost never fail. The number that actually matters for you is this. In 2026, as a Canadian who has been eligible for a TFSA since 2009, your total available TFSA room is $95,000. If you are a couple, $190,000 combined. That means most Canadian seniors have enough TFSA room right now to move the majority of their savings completely out of the taxable structure today for free in about an hour at your bank. And here's the thing that surprises people every time. Your TFSA savings account is just as liquid as your regular savings account. You want the money tomorrow? You can have it tomorrow. There is no penalty, no waiting period, no complicated process. The only difference is that the interest stops working against you the moment you make the move. Now here's the part I want you to really sit with. Gordon is not unusual. Right now across Canada, in Nova Scotia, in Manitoba, in Saskatchewan, in Newfoundland, there are retired Canadians who did everything right, saved carefully, paid their taxes, and are quietly losing hundreds of dollars every year in GIS because their savings are sitting in the wrong account. Not because they made bad decisions, because nobody explained that where you keep your money matters just as much as how much you have. Your bank will not tell you this. It is not in their interest to move your money into a TFSA high interest account unless you ask. Service Canada will not call you. CRA will not send a letter saying, hey, your savings account is reducing your GIS. You have to know to ask. And now you know. 3 steps. This week, simple. Step 1. Pull out your last tax return. Find line 12,100. That is your interest income. Take that number and multiply it by 0.50. That is approximately how much GIS you are potentially losing every year just from your bank account interest. If that number is more than 0, keep reading. Step 2. Log into your CRA My Account at canada.ca and check your available TFSA contribution room. If you have unused room and savings sitting in a regular account, call your bank this week. Tell them you want to move your savings into a TFSA high-interest savings account. It is a free transfer. It takes about an hour, and the interest from that day forward stops counting against your GIS. Step 3. Call Service Canada at 1-800-277-9914 and confirm your current GIS status. If you qualify for GIS and are not receiving it, apply right now. GIS is not retroactive beyond 11 months. Every month you wait is money you cannot get back. Free tax help is available through the Community Volunteer Income Tax Program. Call 1-800-959-8281 or find a free clinic at canada.ca. One more thing before you go. If anyone calls you saying your GIS is being suspended unless you act immediately, hang up. If anyone texts you saying your CPP is on hold, delete it. The CRA and Service Canada communicate by mail. They will never demand immediate payment by phone. They will never ask for gift cards or wire transfers. If something feels wrong, call the Canadian Anti-Fraud Center at 1-888-495-8501. Quick question for the comments. Do you have savings sitting in a regular bank account outside of a TFSA right now? And which province are you watching from? Drop it below. I read every single one, and the most common situations become the next video. Gordon figured this out eventually, moved his savings into a TFSA. His GIS went back up the following benefit year. His drug coverage in BC improved. He told his neighbor in Kelowna the same week. His neighbor had no idea either. That is always how it goes. The people who most need this information are the ones least likely to find it on their own. You found it today. Share this with one person you know who receives CPP, OAS, or GIS, especially if they have savings sitting in a regular bank account. You might be the only person in their life who tells them about this before another year goes by. I'm Cruz. You earned every dollar of these benefits. Take care of yourself.